Shares in the world's most indebted property company are back on sale, but investors aren't interested. China's Evergrande saw its stock value drop 80% as it came back from a 17-month trading suspension on Monday. Once China's largest real estate firm, Evergrande defaulted in 2021 and is saddled with more than $300 billion in liabilities. It's become a symbol of the Chinese property crisis that many fear could spill over globally. On Sunday, the company reported a $4.5 billion loss for the first 6 months of 2023, although that's actually only half the loss it made a year earlier. Well, let's discuss the situation with Evergrande further with Gary Ng, who is a senior economist at Natixis. He's joining us from Hong Kong. Thanks a lot for being with us. Has the extent of this drop in Evergrande's share price come as a surprise?
Well, I think if you look at what the share price changes in Evergrande, it's actually nothing too new because it's pretty much the same level if you look at other developers that may have not halted their sales trading like Evergrande. So therefore, I think it pretty much still shows that, well, in general, the real estate sentiment in China is still not that great. And therefore, I mean, for investors who may have held this company for like close to 1.5 years, they probably looking for a way out. So this is why they are selling that stock at this price, today.
So Evergrande, it halved its losses in the first half of the year, and it does say that it's moving in a direction. Is there any evidence that investors are buying that and they believe that, progress is being made at Evergrande?
Well, indeed, I think if you look at the whole problem that Evergrande is facing, of course, fixed income investors and those invested in equity may have like a different view. For the fixed income side, it's really about how quickly actually the firm can actually restructure itself. And I mean, in the like a few weeks ago, we see that bankruptcy filing of Evergrande in the US. But this is not something that is very game-changing in terms of, finding an ultimate resolution in terms of, where the firm is heading to and whether they can get back the money that they invested in. So therefore, I think the general sentiment for fixed income investor, which is generally more sensitive to risk, is still quite pessimistic. However, for equity investor, it really depends on whether you think like the real estate market in China has actually bottomed out. But if we look at the general like basically performance in the home market on I think the most important point is really about whether home buyers are willing to buy houses right now, which basically means whether developers can actually get their cash flow. Right now, if we look at the largest 30 cities, it's still only 50% of the pre-regulatory change level at the average of 2019 to 2021. So it basically means that, well, is there any very big growth potential? Maybe it's still quite affected by regulation, but I think everyone is waiting for a U-turn in the general regulatory environment, which it hasn't really come yet, or if it does, it probably will come only very slowly.
So you mentioned, this question about whether or not the real estate sector in China has bottomed out. I mean, what is the sentiment in terms of whether or not it has, reached the worst point it's going to reach? Is it getting better, or is it still a major concern?
Well, I think indeed the development that we see recently, especially those related to Country Garden and a few other developers, is that these are actually the companies that would have performed quite well under the regulatory criteria, which is the so-called free red line. And I think this year, even these companies basically they cannot survive, which basically shows that there is indeed something structurally wrong within the system that we see nowadays. So therefore, I think this time around, the pressure is actually even tougher than what we saw in the case of Evergrande before. But the good news is that at least we start to see more policies being rolling out. There are talks about lowering further rates, not only for new mortgages, but also for existing mortgage. There are also kind of a stronger push to give liquidity to developers. But I think the ultimate question is still, even if we see these measures being rolled out, has sentiment really improved? I think from the data side, we haven't really seen a very a big improvement in sentiment, especially from the consumer.
Have we reached the point where Beijing is likely to, directly get involved with the real estate sector and start to, take measures that stimulate the sector?
Well, I think it depends on whether, like an investor think the what is the definition of like the direct intervention, right? Because if we are thinking about like a full-fledged stimulus being rolled out from the Beijing government in the property sector, I do not think that is very likely. However, whether there could be some consolidation with a greater influence from the state, of which they may be responsible for buying more land and build houses, or maybe purchase part of the asset from the private firms, I think that is actually quite likely to happen, and that will be the new normal in China's property sector, which is pretty much state-owned and with like a slower growth rate. And on the other hand, of course, even though we start to see a more state-dominated sector, it still depends on whether Beijing can actually stimulate this demand from home buyers. But I think from what we see right now, people are still quite hesitant in buying big-ticket items, including properties and also vehicles, etc. People do not have too much confidence about the future because they're unclear about the income growth and also about various economic pressure that they are facing. So therefore, I think in the short run, demand continue to be a major problem. Even though there may be lower rate, I think it really depends on how far rates can go, because I think it's also important from the Beijing's perspective to maintain financial stability. And if you are taking away this huge profit from banks, it can be a problem in terms of generating future credit growth in the future that they will need to balance.
Yeah, it's interesting what you say there about what this says about the broader situation with the Chinese economy. But we look very closely at Evergrande and we follow developments there and within the real estate sector. Why is the real estate sector so important to the Chinese economy?
Well, I think if you look at what happened in the past 20 to 30 years, real estate is indeed one of the biggest growth drivers that the Chinese economy has. And it's not only about the general spillover effect from the real estate sector, from the upstream, such as steel, copper, and all this material, and to the downstream about home appliances. It's also about this wealth effect that consumers have when they feel that actually they earn money and then they have somewhere to invest, and actually the assets would appreciate. But right now, I think in the last 12 to 18 months, this is really what is missing, which is basically the wealth effect is no longer there. And therefore, I think like the development in the real estate sector in recent years really put a dual pressure, not only in the industrial side, but also on the consumer confidence side. And I think it's very likely that after COVID, a lot of this business and consumer confidence is actually quite hard to be repaired. I think this is really the major problem that China is facing right now. And of course, if we look beyond the real estate sector, there are indeed some other opportunities, and we cannot say that China is not growing. If you look at some of the other sectors, such as green energy, such as electric vehicles, and generally services has been doing quite well. But what is the major problem? These sectors are still way too small to compensate about the loss from real estate, which form around 1/3 of the economy. So therefore, I think we will continue to see this divergent path across different sectors, and China's growth will only decelerate because they're not like a new growth driver that is big enough to compensate the drag that we see right now.
OK. Gary Young, it's been very interesting to hear what you've had to say. Thanks a lot for joining us on DW Business.